Good morning, friends. Nalnakshi Swami here. Welcome to my channel Stock Index Edge. I'm going to discuss the overview of the price action. What you can decide. You have to decide on your own. Now, it is not the time to trade. Traders should not go for trading. Why? Because there are many reasons. See, if you see the move here, on the left side of the chart, see the movement towards the upside from 18,684. This is the 18,633 to 20,000. It was a strong move. You can see many multiple big candles, big candles pushing the market price to the higher level. Okay, you can see the strength of the big players. Later, while coming down also, when market started correcting, that there was no strength in the market. With the small correction in between, prices pushing up and coming down, it came the moment stalled down to 19,235. Later, from that level, you can see the big players action over here, pushing the market to the higher side of the 20,250. Later, the correction was not very strength up to this level, up to 19,380, and there was a strong push. You can see big players pushing there. See the sellers have dominated. Selling was dominated to the level of the place where these big players have pushed the market to the higher side. Now, this correction is very strong when compared to the correction which happened over here. It has come back to the level where it has started. Now the market is struggling to go up. You cannot see big players, big candles over here, strength in the price action. Now, at present, since 1, 2, 3, 4, 5 days, market is staying in a range and it has made 2 attempts to go above this level, above the level of 19,835, but unable to sustain, and it is coming down. Because why it is grabbing the liquidity. That means it is weakening the strength of call writers. There is call writers are there preventing the market to go up. So it is gathering the liquidity on the buy side liquidity, which has been kept by the short people. This buy side, when they are gathering the liquidity on this area, they need to gather liquidity down, because here they have taken the liquidity, grabbed the liquidity. You can see these are the sellers. Sellers have been, the market had closed over here and the market has been pushed from this level to this level. They have taken the liquidity of all the sellers from here, and they are taking the liquidity of the call writers. Probably it is trying to struggle. I don't see any strength. It needs to, if it goes up, it may take the liquidity on the above side and it may try to move downside. We do not know whether they want to take the liquidity on the upside. Still they want to move up and still they want to. So if they come, they have tried to go and take the liquidity, and this candle is suggesting mitigation of this liquidity. They have tried to mitigate this. Mitigate this means they have to put extra money to buy all those things. Now they have gone up to this level. Again, they have gone up to this level and closed within the level of the 19,862. I'm on the future chart. So now there is possibility they may try to come and mitigate this level, that is around 19,506. When they have gathered this liquidity, if they come over here just beneath this level and 19,463 to 19,500, their task will be completed. So there is a problem in the liquidity. It appears the market price to go up to cross this boundary, it is struggling. So it has been kept in the range and manipulation is taking place. Manipulation is also taking place, and not only the manipulation and also premium. They are trying to buy the time to decay the premium of the option buyers or option writers. So premium decay is taking place within the range. The market is in sideways. I sincerely request traders not to trade. It is better not to trade in this range because you will be stopped out. So there is no momentum even on the intraday position. Let me go to the index chart. Let me go to the index chart on intraday level basis. Let me show you what has happened. What has happened on the, see, if you see the range, this is the range created. It is the gap up. And seller's liquidity has been grabbed. And also, this is call writers. This boundary has been smashed. And it is a gap up, and it has gone to this level. See, after gapping up to this level, you can see a big sell-off coming over here. Big sell-off up to this level. This is a sell-off. So next, say on 17th, let me change it is a New York time movement. So that you will, okay. On 17th, so market tried to push up. So a small liquidity, this is the liquidity zone. Here, this is a huge sell-off candle. There is a void, liquidity void. I'm marking this. See, exactly from this level, there is change of character. This entire price movement was swallowed by this big, huge candle, and there was a consolidation up to 21st. And yesterday, it was a gap up in this area and gapped up, and all these stop loss hunting has been, see, every time when market, yesterday there was this stop losses. Here stop losses and here stop loss. The stop loss hunting has been taken place, and this is a gap up. So it is an area gap. So gap up is not like this. This is an gap, breakaway gap. This is a breakaway gap, and this is an area gap. So this area gap will be, they will try to fill this gap. Probably they can fill this gap. So play may be, today, the play may be between 19,703 to 19,779. If you see the gift Nifty, that is overnight futures market, there is some sort of only mild correction, only 20 points down you can see. Probably, see, the market is in a, originally it is coming down and it has been manipulated. It has been yesterday manipulated by the gap, and they have pushed the market to the higher side, and it is, while closing, that is the intention of the market is towards the downside. It has closed downside. Probably they may trade in this, when this range, that is the level of 19,755, the low made on the yesterday, if it is broken, then they will fill this. They may try to fill this gap. So you will be confused. Actually, you will be confused. So neither the break of this, see, break of this range. This is the major market is contained within this big candle. This is the big candle. This is the big bullish candle. And then market play is, this is within this candle. So the whole price has been contained by the big player, and it is in a range. So even today also, you need to be careful. The range will be, suppose if it breaks below 19, you will be getting around, the range play may be between the 80 points, 67 points. Only if it starts extending below this range, you may get a trade in that. Still, even if it extends below this range, 152 points, still there is a big candle standing over here as a base. Only the major trend change will take place when it price starts moving below this level, 19,590. So if it starts breaking this range, there is a threat. 19,626, there is a threat for the market. It may lead to continue to move down. So today is a deciding day. Probably today is Wednesday and it is Bank Nifty expiry day, and also Bank Nifty is not showing any momentum after the par. There is neither movement to the upside with a strong movement. So you need to be careful while playing with this. Don't get yielded to the manipulation, because the direction of the market, major direction you can see from 16 November, major direction is to the downside. So this is a manipulation to the upside. Probably the range play is going on there. Be careful, because most of the time range traders have been taught by sell at the high in a range, buy at the low. So many times the buying at the low will not work, and you need to be careful. So this is an excess of the range, and now it is coming. This range is the major range, 19,805 to 19,666. So you need to be careful actually while trading in the market. That's what I want to say you traders, be careful. Don't yield to the manipulation. Thank you very much. Nalnakshi Swami signing.